The inflation data is in and it actually came down, but it brought the market down with it. Let's talk about what's going to happen this week. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to this week's Elite webinar. Now, if you are watching this on YouTube and you haven't done so, you're going to want to make sure you hit that like and subscribe button, hit that bell icon right next to it to get notified every time we upload a new webinar here on the channel, because things are happening and things are happening fast in the world of the stock market. So let's take a look here at the S&P 500 and see what in the world is going on this week. So if you were watching last week's webinar, which you should have, I told you that Thursday was the day. That was the day that the core CPI numbers were coming out. And it definitely did not disappoint. Now, of course, Powell was talking on Capitol Hill on, I believe it was Tuesday and Wednesday, if memory serves correctly. And he was mostly dovish from what I understand. He said that they're not looking to increase rates, in the future, which of course is a good thing. At least if you're in the market, you don't want to see those rates go up anymore. But I will mention the fact that he didn't say that they weren't necessarily going to cut rates. Now, of course, they've been talking about cutting rates for frickin' forever. Well, now they have some actual reason to say that they have, justification to do it, because Thursday, the CPI numbers came out, and I'm looking at them right now, and they actually came down 0.1%. Now, that was the first print for month over month that has been negative since May of 2020. So, I mean, that is a huge plus for the Fed and their attempts to kind of curb inflation. Obviously, with these increases in interest rates, they have been trying to hold that down. Obviously, they haven't been holding the market down too well. But the stock market's looking fine. But, you would think these numbers came out and everybody was going to be like super happy, right? You would think euphoria in the market to the moon. Nope, not at all. Everything's sold off. For lack of a better term. And so, the thing to kind of remember here is just because the inflation print was a 0.1% less than what they expected, it is still going up. That is one thing to remember. It's just because that inflation print was negative doesn't mean that actually inflation is coming back down. It just means that it's going up at a slower rate than they expected. So, again, I will mention my 2 does not equal 3. 2 is where the Fed wants to see core inflation, of course, CPI year on year and month on month, and they ain't there yet. Let's see. So let me just pull the numbers up here real quick. So yeah, core CPI came in at 3%. Looks like that was the month on month for June, and then year on year is 3.3%. So, a step in the right direction, about 0.1% both directions, but still not where the Fed wants it. So the Fed can take this and be like, hey, inflation's coming down, so we can start cutting rates. I personally think that is a little bit premature. 0.1% is not anything to be shooting fireworks off the top of the White House for, if you catch my drift. But there's no doubt that this will definitely be used by everybody, on either side of the spectrum. And I'm not going to talk politics here, but let's be honest, it's part of what we have to think about when we're dealing with the stock market. But yeah, definitely a huge sell-off. Now, everything was gapping up pre-market when these numbers came out, and then everybody took that opportunity to offload whatever it was they were holding because everything was going red after the bell on Thursday. Now, Friday, we definitely had some recovery. We were looking really strong, made a new all-time high here on the market on Friday. But look at that sell-off going into the close. We could not hold that new all-time high and looking very weak up here. So, it has been a roller coaster of a week, to say the least. Obviously, with Fed Chair Powell talking on Capitol Hill, addressing the Senate or the House and the Senate, if I'm not mistaken. Somebody can correct me on that if I'm wrong, but it was one of the committees that he was talking to. Looked like he was feeling pretty positive overall. And then, inflation number came out. Of course, the Fed's going to love it, but the market takes a dump. So, it's one of those things where, you see like good news is bad news type of things. It's like when a corporation reports earnings, right? And the earnings look great, revenues look great, but guidance isn't exactly where they want it to be, and the stock gap's down 20% on good earnings. It kind of feels like that a little bit. just to kind of make an analogy there. Now, of course, the S&P 500 is not one corporation, and we weren't exactly reporting earnings because the S&P 500 is just an index. But it is something to kind of keep in mind, when these numbers come out. We always say that there is a high probability for volatility, and we were definitely not wrong, but that doesn't necessarily mean it's going to go in the direction that you think. So all I'm going to say right now is be very, very careful with your trades. Obviously, we are in a very tumultuous period of time right now in history and, in terms of economics. So just be very careful with your positions, your position sizing. Don't go too crazy. I think being a little bit conservative with your investments is going to be a very prudent choice. But you know what? You do you. That's the best thing I can say. For me personally, I'm going to be taking it kind of easy. I'm not sitting on the sidelines, but I'm also not going hog wild either. I know it kind of feels like right now you can throw, a dart at a board with any tech stock on it and it'll go up, but it's not always going to be the case. So just be aware of that. All right, let's take a look here at the breakdown for the S&P 500 and see what's going on. And you'll see who suffered the most here on that red day on Thursday. Like I mentioned, tech getting absolutely slaughtered on Thursday, but we definitely pulled back a bit on Wednesday. A bit of a rebound there. Definitely some big movers. Tesla, Nvidia were definitely moving quite a bit on Thursday and Friday, as you can see. But tech and communications still outperforming the S&P 500 itself right now. The S&P 500 up almost 19% on the year, which is absolutely crazy. We're only into quarter three by just like 2 weeks, and we're up almost 19%. It's just insane. But you can see here a lot of things rallying up here. Financials looking really good. Utilities looking real solid this week, even with that big dump on Thursday. Utilities just rolling here. Healthcare, healthcare is here. Consumer discretionary, we've got energy, consumer staples, all above the zero line, but underperforming the S&P 500. And look at this move in real estate over this week. So really big run up, almost back to zero. Man, what a goal for real estate. Like we're almost back to break even for the years, guys. We've done it. Ladies and gentlemen, we got him. Not quite so much, not quite there, real estate, but keep going because you're looking a lot better this week. But yeah, definitely the big sell-off in tech really kind of fueled this move down in the market, really kind of helped because you'll notice a lot of these other sectors were actually up on the day, but tech just dragging the market down because it is kind of propping it up right now. Let's take a look here at the asset classes and kind of see what's going on as far as that is concerned. Now, obviously, we have had our trend line here with oil that has been respected. Respect the line. That's all I'm going to say. We had obviously been in quite this uptrend here going into, summer, and then we kind of started to hold off, consolidate a little bit, and, we kind of broke through this support line and now has become resistance that has been tested and rejected. So far, so good as far as my line drawing. I got to say I'm pretty happy with that. So oil definitely respecting the line here so far, just as they would say in Star Trek, respect the chair. Oil going to be respecting the line, at least for now. So oil looking pretty good here. Let's not kid ourselves. We are over $80 a barrel. Looks like we closed at 82.21 per barrel on Friday for light crude. So oil doing just fine, just not going to the moon as some people would have predicted. Now, something that looks like it may be going to the moon is gold. Now, I drew this for you last time. I'll draw it for you again. This is looking like a pretty classic head and shoulders pattern here. And that would be a bearish signal. This would represent a break to the downside. Now, I'm not saying that that's what's going to happen. Just something that I'm keeping an eye on. Now, if we break pattern and we blow through this 24.25 all-time high on gold, well, you can just say, I told you so, Chris. Chart patterns don't matter. And funny because that's what I was saying too. But just something to keep an eye on here. Gold seeing a very big push here this week, with everything going on in the market and with inflation coming back down. That being said, this 2300 area on gold seems very strong at the moment. So we really are a bit trading sideways here in this channel right now. So we'll have to see if that channel holds. But I think it's going to take a little bit more than what we've seen to get gold moving any higher. But we'll just wait and see this week, see what happens. But yeah, gold looking a little bit parabolic again, not quite like it was down here. But we'll have to see what happens this week. That's going to be very interesting going forward into this next trading week here in July. Let's take a look here at the bond yields and the US dollar. Now, with inflation numbers coming down, everybody's thinking the Fed's going to be cutting rates. So if they're going to be cutting rates, then Treasury yields are going to start going down as well. So as we can see, the bond yields are starting to reflect that forward-looking mentality that, okay, the Fed is going to cut rates later this summer. Will they actually do it? That's yet to be seen. But at least what we're seeing here in the bond market right now is the belief that rate cuts are coming. And so yields are starting to come down. That's definitely something to keep an eye on, because obviously these treasuries are incredibly sensitive to interest rate changes. So that is something to keep an eye on here. Let's take a look at the dollar. Dollar taking a little bit of a beating this week, still well above 100, to be honest with you. So very strong. We're really just kind of consolidating here, honestly. Since about April, we've just been kind of doing this up, down wave type thing, and we're doing okay as far as the dollar is concerned. Things go up, things go down, but yeah, dollar's still holding strong, not going anywhere anytime soon. All right, if you are here on the live recording and you want to go ahead and start typing your questions, please feel free while I start going over the important dates in the market this week. And there's only one, and it's Monday, because Powell's going to talk. And anytime Powell talks, what happens? The market moves. Now, I can't tell you which way it's going to go, but Powell talking is always a pretty big catalyst. So if you are hanging around at 12:30 in the afternoon, right after the lunch hour, and you want to tune into Powell's speech, or just take a look at the S&P 500 while he talks on a smaller time frame than the daily chart, you're probably going to see a lot of volatility, a lot of stuff going to be happening. These other dates in the market, no one cares. I'm just going to be honest with you. These are not major catalysts. Retail sales month on month, cool. Really not a big catalyst here. Building permits, definitely not a big catalyst. Fed Chair Powell speech, definitely a big catalyst. Something to keep an eye on. However, if there's something that's more of a catalyst, it would be earnings time. We are coming back to earnings. We got more happening, and we've got some names coming in this week that we're going to want to keep an eye on. Now, the first part of the week is not too exciting. We got a lot of financials, a lot of banks. We got a lot of brokerage, a lot of banks, different things here. Really not interested in a whole lot of this. Now, some people will be watching Bank of America, Morgan Stanley. That's about it that I can really talk about here. Goldman Sachs, of course, is going to be before the open on Monday. Yeah, we can get rid of that name. Now, Wednesday, we've got some different names coming in. We got some consumer staples here. We got Johnson & Johnson. That's a big name going to be reporting on Wednesday. I'm just looking through here. More banks that we're not too interested in. United Airlines, not too interested in that one either. Honestly, airline stocks, not something I'm too keen on right now. Alcoa, something to keep an eye on. Discover, if you like playing credit cards, there you go. Nothing really too interesting after that. Thursday, though, we get some names. First one, TSMC, Taiwan Semiconductors. That one is going to be one you're going to want to watch. If you're a day trader, Domino's Pizza. Who doesn't like pizza, and who doesn't like volatility in pizza stocks? Definitely one to keep an eye on if you like playing that sort of thing. And then after the close, Netflix, baby. We got to see those subscription numbers because that is going to be the driving force behind Netflix. But that is definitely the big name, in my opinion. TSMC and Netflix, the two big ones on Thursday that you're really going to want to watch because these can definitely make a move in the market. Looking on Friday, Amex, again, if you like playing credit cards and credit companies, there you go. Not too much else. If you're in the defense space, Halliburton is going to be reporting on Friday before the open. But yeah, those would be the big ones that I would be keeping an eye on this week. Just looking through the list again, make sure I didn't miss anything. Nothing too spectacular there that I'm going to be keeping an eye on myself. All right, so I've got a couple questions in coming through the webinar. I also had somebody PM me a question, so let me just pull that up real quick. But let me take their questions here from the live stream first. So Keely is saying he's looking at IEP. I believe we've looked at this one before. Oh, yeah, this is, what is it? Carl Icahn? All right. looking at this for a long-term hold. Just curious what my opinions are of it. Well, I mean, obviously things have not been going for Mr. Icon stock here for a little bit of time. So, I mean, we definitely seem to be holding above this 15 area. Seems to be fairly, solid. So let's put that there so we can see that a little bit better. So right about there, I'd say. Yeah, right around 1550 thereabouts. So I mean, I guess if you believe in Mr. Icon and what he's doing as far as that's concerned and his capabilities, then you can definitely consider this for a long-term hold. From a technical analysis standpoint, it looks pretty garbage. But there's more to it than just technical analysis. I think that's the most important thing I want to hit here is, if you've done your research, if you've done your fundamental analysis and you've looked into the financial of the companies, you believe in what, Mr. Icon's doing, then this could definitely be a great buying opportunity for you. However, I will say, again, from a technical analysis standpoint, we have some big issues here. The moving averages are basically crashing down here, and they have been acting as rock solid resistance. Now, that being said, the moving averages are starting to get really close together here. And at that point, you may see a move one direction or another. We may be able to push through this and start to move back up on IEP. Definitely a possibility. We could also see another breakdown. If we see another breakdown below 1550 here and it's strong, that would be a good indication to maybe GTFO, get the flip out, if you didn't know that. But, from a technical standpoint, like I said, not looking too high. However, like I said, there's more to it than just technicals. If it was just chart patterns, we'd all be flipping millionaires by now, as I'm sure that you can imagine. There's more to it than that. So again, if you believe in this company, if you believe in what Mr. Icon's doing, then this could definitely be a great price for you to get in on the cheap. What are these dividends paying out? About $1 a share. That ain't half bad. So, I mean, definitely a great dividend paying stock here. And we've got earnings coming up at the beginning of August. So that's something to keep an eye on. But if you're looking at it for a long-term hold, that again plays differently. You're not going to be worried so much about the day-to-day price action because you're going to buy and hold. So again, I would say if we see a break below this 1550 area, that would be my signal. Maybe we want to get out. But I will say, if you believe in your thesis and you believe in what he's doing, and okay, it says I think they had to submit a Form 205 extension for payments due. Okay, gotcha. So that could be an issue as well. We'll have to see how that plays into things. Let's see here. Yeah, it looks like they had to file something here on the 5th. So definitely something to be aware of with that. So I would just be really careful with this one. Just because it's gotten crushed so hard is really kind of what it comes down to, in my opinion. I would look up the short float, but right now that wouldn't be very easy with the way I've got my screen set up. So we can check that out later. And that's definitely something we can post on the video when we do the editing. So yeah, I would just be careful with this one. If you're looking at it again for a long-term hold, you can definitely work with it. Obviously, we've been missing earnings pretty hardcore, like a lot. Yeah, that's a lot of missed earnings. Mm. Mm-mm-mm. Yeah, we're getting wrecked on earnings here. Just be careful. That's all I'm going to say. Again, if you feel that this, from a fundamental standpoint, this can work, you rock with it. But yeah, from what I'm looking at, me personally, I'm not going to jump in, but that doesn't mean that this doesn't fit your risk profile and your investment style. And I think that's, again, an important thing to always remember. That if you believe in it and you think it looks good, this is a great price to get in. I mean, even if we see half a recovery from this, that would be a huge win for you. That being said, if we get crushed and we get blown down below this 1550, there ain't nothing else. Oh yeah, I don't blame you on that. Those dividends are nice and spicy, aren't they? Dollar per share on a $17 stock. Yeah, that's not something to shake a stick at. Just remember that stock's going to dip once those dividends, once we pass that ex-dividend date, because it's going to hit the balance sheet. Actually, hits the balance sheet when they actually announce the dividend, and it becomes a liability on the balance sheet. But once it's paid off, then obviously it'll affect the stock price at that point. because it impacts, basically assets and liabilities. So just be aware that when that dividend does get paid out, you typically do see the stock price take a dump. And you can see that almost perfectly here. We closed at 18.31. We had our $1 stock dividend and we opened at 17.31. Pretty typical for a stock like this, or any stock actually. Once it pays that dividend out, it will typically drop by the amount that the dividend was paid. So just be aware of that before you jump into it too heavy, and you should be okay. But yeah, if we see a break below 1550, I'm not sure where the floor is going to be after that. So just be careful. Keely, that's all I'm going to say. All right. So I did get a question in here. Okay. Asked if I could take a look at BMW on the webinar. Let me take a look here. All right. So let's see. So the question is, can we take a look at BMW? He is in at 91.90. Okay, so we're up almost a couple, about 20, 30 cents here. He's been in since the beginning of June, so he's been holding for a little bit. Probably got in somewhere in here, if I had to guess. Starting to get some momentum finally. Absolutely. He's looking to possibly take profit at 97. However, earnings are coming up in 2 weeks, and I'm debating if it should hold till then or if it hasn't touched 97 before that. Okay. Great question here. So let's take a look. So obviously the 50 is kind of crashing down here, which makes sense since this thing has been selling off hardcore since April of this year. I mean, we've been absolutely getting wrecked here with BMWs. We're not doing so hot. Looks like revenue was a slight miss there, but EPS was above average or above expectations, which is always nice to see. How's that dividend? $6 per share. All right, so we definitely found the bottom here, right? We definitely have some support here right around 86.96, so right around $87 per share. Let's just stick that in there. There we go. So we had this lovely double bottom that we hit here. We were selling, and then we have this double bottom, and we're starting to make that move towards the upside. Now, the question is, can it keep going? I will say 97 is it is achievable. It is ambitious, if you ask me. From where we're at here, being at 86, 96, or 87, we're seeing a lovely rebound. I mean, look at that movement there. But we do have space, but we do also have the moving averages crashing down. Now, I don't think that the 200 is going to get there before we have the potential for reaching 80 or 97, excuse me. But obviously, you've been holding this for over a month. You've had to undergo some pain, and congratulations, well done for that. Good job holding on and sticking to your thesis first and foremost. This is what happens when you show some tenacity, some staying power. So great job. I have to commend you for that because a lot of people would have just dropped it and given up. So now your thesis is being proven correct. You had to hold through some pain. You're doing great. Just be really careful. The last thing I want for you to do is have this trade turn red on you. Now, that being said, we're only up about 30 cents a share at this point, so not exactly a huge, a huge win for you at this point. That being said, let's take a look at earnings here the last couple times. I know we've been missing on whether it be EPS or revenue. There's some type of a miss here. And looks like this one, we actually saw some good numbers and we started to pull back up from it. This one, I'm seeing a bit more misses than we're seeing hits, for lack of a better term. All I'm going to say is by holding through earnings, it's a coin flip. I'll be straight with you. There's no way to anticipate how stockholders are going to react to the earnings and the reports that come out. Now, if they miss, like, well, they didn't miss that much and they're okay with it, or they miss a lot and no, we're not okay with it. We're going to let our BMWs go. We're going to switch over to Volkswagen. Yeah, I mean, obviously you've got 2 weeks before that happens. It doesn't happen until August. So it looks like Thursday the 1st. So you have some time to let this thesis work itself out. Obviously, it looks like we've definitely got some inflection points right around here, around 94.12. So definitely keep an eye on that when you get closer to there. If we get it, we'll just call it 94. Let's call it even, right? Right on that whole dollar mark. So 94 could be an area that you need to be careful of. We came here before several times and we weren't able to bust through it. Now, in some instances, we were. Sometimes it has acted very nicely as support for us. There's that double bottom pattern again. And then we saw what happened. So that's why I'm saying not everything can be taken from chart patterns, but definitely keep an eye on 94. When you get close to that, may be an idea to, if you still don't see a lot of momentum and we just kind of gingerly come up there and tap it and start to sell off, that might be a good indication that maybe it's time to sell. Maybe not. Maybe we hit 94 and the BMW stockholders are like, risk off. Let's buy more. Kick that turbo into gear. We're going to the 200 simple moving average. Well, then you should be good to go to 97. All I'm saying is you got a lot of stuff overhead that you need to be careful of and keep an eye on. So now that this position is finally in the green, I would keep an eye on it. I wouldn't necessarily say that you should put a stop in place, because in this market and with how much this stock is starting to move and how volatile it can be intraday, you could easily have it come down, hit your stop, get you out, and then the thing goes off to the moon and you're going to be kicking yourself. So I'm not going to necessarily say to put a hard stop in place, but if you have the capability and the time, keep an eye on this thing, because like I said, we've got the 50 crashing down here. The 200 is starting to meander this direction, but it still is above your price target. But yeah, it's going to take a lot of momentum and a lot more, buying pressure to get this going, but definitely looking solid so far. Just babysit it a little bit, and I think you should be just fine, is what I'm going to say. All right. Well, I'm not seeing any other questions coming in at the moment, so I just want to take a quick second to thank everybody for coming out today for the live recording. Really appreciate each and every one of you here in Riz Elite. For all of you watching on the replay, really appreciate you as well. You keep us going. We really appreciate all of our supporters here on YouTube and in our Riz Elite community. Have a great rest of the weekend, and we'll see you in the market on Monday.